Ladies and gentlemen, welcome to Q1 FY2024 earning conference call of Elecon Engineering Company Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs and the options and expectations of the company as on the date of this call. The statement do not guarantee the future performance of the company, and it may involve risk and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference call is being recorded. Now I hand over the conference call to Mr. Prayasvin Patel, Chairman and Managing Director for Elecon Engineering. Thank you, and over to you, sir.
Thank you. Good evening and a warm welcome on our Q1 FY2024 earnings conference call. Today on the call, I am joined by Mr. Ayush Shah, Non-Executive Director, Mr. M. Nanda, Head of Gear Division, and Mr. P.K. Bhasin, Head of MHE Division, Mr. Kamlesh Shah, Group CFO, Mr. Narasimhan Raghunathan, CFO. We have uploaded our financial results and press release on the stock exchanges and on company's website. And I hope everyone had an opportunity to go through the same. I will start my opening comments with industry insights, followed by business overview, post which Kamlesh Shah, our Group CFO, will take you through the financial and operational performance of the company for the quarter ended June 2023. India's GDP has continued its upward trajectory and has emerged as the fastest growing economy. This growth is supported by robust private consumption, increased industrial activity, and strong investment activity, strengthened by the government efforts to boost capital expenditure. The strong demand in sectors such as power, steel, cement, sugar, mining, and infrastructure, coupled with emphasis on industrialization and localization through initiatives like Make in India and PLI schemes, is driving the growth. Furthermore, India's strategic focus on attracting global supply chains, especially through strategies like China, presents a significant opportunity for the country to become a prominent manufacturing hub. This shift has created a surge in demand which is benefiting India. For overseas business, we have been witnessing increased inquiries for our diverse range of products, indicating a positive trend in the market. To capitalize on these favorable conditions, we are increasing our marketing and sales activity for our overseas business. We are going to set up a wholly owned step-down subsidiary in South Africa to cater demand for our products in the African continent. We have signed off on 5 OEM business in European market with an estimated annual business volume of approximately 5 million. This development is encouraging and moving towards our strategy to tap and gain momentum in European markets. With more penetration across OEM, we are also building a creditable reference and a brand for our products in these markets. We are committed to becoming the preferred supplier in these markets and are actively engaging with OEMs to achieve this goal. Expansion into new territories and increasing our market share in existing geographies represents another significant growth opportunity for us. we have been diligently working towards establishing a strong brand value for Elecon in order to capitalize on these prospects. The milestone of signing off of the OEM business in overseas market and robust domestic demand gives us the confidence in delivering a strong performance and upholding our commitment to achieve consolidated revenue of Indian rupees 2,000 crores with an EBITDA margin of 22% by FY24. Moving on to segmental performance. For Gear Division, we proudly hold the position of being one of the largest solution providers of industrial gears. Our commitment extends beyond maintaining this position as we actively seek new opportunities within niche industries. By significantly enhancing our technological capabilities, we have solidified our position as an industry leader with 39% market share in FY23 against 34% in FY22 in the Tier 1 domestic market. We continue to see the conversion of strong order inquiries into growing order book, reaffirming our market strength and the trust placed in our products and services. We target to achieve 1,700 crore of consolidated revenue for this division by FY24. We have also launched our Eon 2.0 series in the last quarter and have been witnessing positive responses from multiple customers across industries and also overseas. This Eon 2.0 series has multiple features in terms of operations and maintenance of the product and can pose cost advantages to the customer. We continue to focus on R&D and product development as we strive to deliver high quality, industry agnostic and customizable products that ensure customer satisfaction. Through consistent investments in technology and operations, we have successfully reduced the lead times, thereby enhancing our operational efficiency. Speaking of the MHE segment, we are experiencing a surge in demand in the MHE division, fueled by revival of the capex cycle and strong demand from industries such as power, fertilizers, cement, among others. In the past 12 to 18 months, we have successfully turned around MHE division, resulting into a profitable business. Our strategic approach has involved focusing on supply of products and aftermarket business while discontinuing our involvement in EPC project businesses. This shift in strategy has proven effective and aligned with market demands. With these positive developments, we reaffirm our target of achieving consolidated revenue of rupees 300 crores in FY24. We are confident in our ability to attain this target through our strategic focus, streamlined operations, and leveraging the trust in Elecon brand and service. Lastly, we remain aligned with our vision to maximize value creation for every stratum of society. By aligning our vision with ESG, we have the power to drive positive change, contribute to a more sustainable future, and create long-term value for our stakeholders. With this, I would like to hand over the call to Mr. Kamlesh Shah, our Group CFO, for financial highlights of Q1 FY24. Over to you, Kamlesh.
Thank you, sir. Good evening, everyone, and a warm welcome to our Q1 FY24 earnings calls. As already said, we have uploaded our press release on the stock exchanges. I will now take you through the highlights of financial results for Q1 FY24. Revenue from operations, or total revenue from operations on consolidated basis stood at rupees 414 crore as compared to 328 crores in Q1 FY23, registering a robust growth of 26%. The domestic market accounted for 73% of the revenue, with the remaining portion coming from overseas market. Adjusted EBITDA post Q1 FY24 stood at rupees 96 crores, marking a growth of 33% compared to rupees 72 crore in Q1 FY23. Adjusted EBITDA margin for Q1 FY24 stood at 23.1% as compared to 21.9% in Q1 FY23, an increase of 120 basis points year-on-year. Profit after tax for the quarter was rupees 73 crores, representing a remarkable growth of 72.5%. PAT margin witnessed a significant improvement of 470 basis points. Our focus on operational efficiency and market diversification has contributed to this performance. Moving on to the segment-wise contribution, industrial gears accounted for 87% of the revenue, while material handling equipment division contributed around 13%. Speaking of the industrial gear division, consolidated revenue stood at rupees 361 crore for Q1 FY24, reflecting a growth of 27% compared to the same period last year. The EBIT for Q1 FY24 stood at rupees 89 crores, indicating a substantial growth of 60% compared to 55 crores in corresponding quarter of the previous year. The EBIT margins for Q1 FY24 stood at 25%, representing an increase of approximately 500 basis points on year-on-year. The order intake for Q1 FY24 for gear division amounted to 446 crore, highlighting a strong demand in the market. As of June 30th, 2023, the open orders stood at rupees 655 crore, further emphasizing the robust demand. Speaking on the MHE side, revenues for Q1 FY24 stood at rupees 54 crore, showcasing a growth of 25% compared to rupees 43 crores in Q1 FY23. This growth serves as testament to the successful strategic turnaround, translating into a strong quarterly performance. The EBIT for Q1 FY24 stood at 12 crores, representing an impressive growth of 163% YOY. The EBIT margins improved to 23% from 11% in Q1 23, reflecting an improvement of approximately 1,200 basis points. Increasing the margin for MHE was on account of change in product mix and higher sale of after-sales and repairs in this quarter. MHE division order intake stood at rupees 51 crores with a closing order book at rupees 138 crores as of 30th June 2023. Furthermore, our total consolidated order book, including both divisions, experienced order inflows of rupees 497 crores during Q1 FY24, and the total open orders as of June 30th stood at rupees 793 crores. As discussed earlier, we are pleased to announce that we have successfully signed off 5 original equipment manufacturer business agreements in the European market. These agreements have an annual estimated business volume of approximately euro 5 million. The prototype development of this OEM project is currently in progress with an aim of supplying this by Q3 FY24. We anticipate commencement of commercial production in FY25. The agreements signed with these OEMs demonstrate our ability to deliver globally competitive, high-quality products and our confidence in capturing a significant share of European market. We have made a progress in recovering funds through arbitration awards. As of June 30th, 2023, we have received rupees 27.4 crore out of the total awards of rupees 63 crore, and we expect an additional realization of rupees 4 crore by Q2 FY24. Furthermore, we have initiated fresh arbitration proceedings with a total value of rupees 31 crore during Q1 FY24, outcome of which may take 1 to 2 years. We are confident of a positive outcome for the same. Furthermore, I am pleased to announce that Elecon has made a significant improvements to its balance sheet. As of June 30, 2023, we are a net cash surplus positive of 250 crore at the consolidation. On this note, I would like to open the floor for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kashyap Javeri from NK Investment Management. Please go ahead.
Thank you so much, sir, and congratulations on the really great set of numbers. I have 3 questions. One, on that 1,700 crore target for clear division for full year, this now implies a run rate of about 450 crores of revenue per quarter. For the balance 3 quarters, and similarly for MHE also, the asking rate is definitely higher. So, what are the sectors which are giving us confidence of achieving that number? Obviously, the order also has gone up quite a bit. So, what has driven that? Second is on the margins, guidance that you have given in the press release at about 22% for the full year. Even adjusted for about 4 crores of that GST write back, our margins are still very strong for this quarter. So is 22 like a base case margin, and there is a element of positive surprise to that? And the third question is, what is the net cash on balance sheet as on 30th of June? These are the 3 questions.
On account of the sustainability of margin, 22%, yeah, we are confident. This minimum 22% margin is sustainable at console level. There is a scope for improvement which we see. However, presently it is difficult. We can spell out that, what will be the margin for the entire year. Q2 will be a right time for us to spell out that margin, any improvement for that. So far, the net cash surplus is coming, as I already said, we have the net cash surplus of rupees 250 crore as on June 30th, 2023. About the business, Mr. Nanda will just give a highlight.
We are getting very good business from various sectors, in India, as a matter of fact, and overseas also, basically. As already explained, that we are now focusing on overseas business from the customers, OEMs also, which we already got in our scope, from Europe, primarily we have just highlighted.
So any specific, even in overseas, any specific sector which is driving this, whether it is heavy industrials or whether it is the process industries, anything in particular? Hello. Yeah, I missed out in between. My question was that even in overseas business, whether it is heavy industrials or whether it is process industries, what is driving, the demand? And a connected question is that if I look at our annual report for FY23, most of our subsidiaries overseas, the sales growth in the local currency was quite muted. So what gives us this confidence, even at this point of time that, from here on, in terms of growth, overseas can actually contribute equal or more?
See, first of all, there is a big thrust on trying to get more OEMs, that is original equipment manufacturers, in our fold as customers, so that we are able to get consistently higher requirements of orders. That is number one, and which we have started doing now aggressively. The other thing is we are putting a lot of thrust in enhancing our marketing infrastructure abroad, whereby we would be able to generate more inquiries as well as get more business. So these are the strategies that we have taken up. Apart from that, we have given thrust. We have penetrated now into areas where we were not there before, certain countries in South America, Australia, etc., which is giving us great opportunities abroad. So we are reasonably confident that we will achieve the targets that we have laid out for exports this year and going forward. We are also improving our responses for our export companies abroad, so that we are able to respond to finally our customers abroad in a much better fashion.
In regard to your other question, last year the sales is muted. But if you consider the impact of Russia-Ukraine war at the beginning of year itself, even after considering the impact for that, we have sustained our revenue as well as EBITDA.
Okay. Sure. That's it from my side, sir.
This is also in spite of the fact that there has been a recessionary trend in Europe and United States, the aftermath of COVID.
Right. And we remain confident of doing better this year despite that versus this is what we did last year.
Absolutely.
Okay. Thank you so much, sir. Thank you so much. I'm done.
Thank you.
Thank you.
The next question is from the line of Pratik Kothari from Unique Portfolio Managers. Please go ahead.
Hi, good afternoon and thank you. So first of all, my hearty congratulations on such a remarkable performance, and highly appreciate the team for the improvement in disclosures that we have done this time. So my first question is on this 5 OEM orders which we won. So if you can highlight a bit more qualitatively in terms of the kind of customer segment that we intend to cater to. Are these new customers? What kind of products are we developing for them?
These are customers. They are original equipment manufacturers from Europe, and they are into various segments, from steel to rubber to plastic to various other industries. So we are reasonably confident that we have to deliver some prototypes, which after those being approved by them, we will start getting regular orders.
Okay, so these are not new products first. I mean, we would already be doing this locally.
We have delivered similar kind of products because these are custom-made solutions for the clients.
Fair enough.
Okay, but we do this for very many clients. Okay, it's a very standard kind of thing because you have to meet their specific requirements.
And so I believe this would just be beginning of a journey or relationship with them in terms of they trying out or giving us a smaller batch of orders. So potentially, I mean, where can this lead to? Maybe a few years down the line.
It is difficult to say because, it'll all depend on the supply and demand of their products where they incorporate our gearboxes. But as of now, we feel that there is a very strong potential that it will lead to a sizable business.
Correct. Sure. So my second question is, we are seeing heightened ordering in railways, specifically Vande Bharat, even in wind energy. So just, do we have any plans to be present there or are we there? What are our thoughts here?
We are making inroads into metro gears which are utilized in the metro trains, as well as we have also made inroads with a foreign company who is manufacturing gears for the railway industry internationally. And therefore, we believe that this will lead to more business in the coming future.
Correct. This would be traction gearbox?
Yes, traction gears.
Correct. And I mean, in the past, we used to be large player in gears for windmills. I mean, anything there?
No, because the reason is we have purposely stayed away from windmill gears. The reason being that though these look to be very attractive, they are highly inconsistent in their demands because it is always subsidized by the government, windmills. And it is based on government policies whereby the demands can fluctuate widely, and which quite often puts a sizable amount of pressure on the suppliers, either for excess capacity requirements or for manufacturing and then equipments lying with the suppliers for a long period of time. So we have purposely tried to stay away from them.
Correct. And so my last question on the defense and marine business. I believe we have some after-sales service which is already ongoing for the project that we have delivered on. Any comments on any new project coming up, anything which is moving?
Yes. What is very heartening is that by the end of the year, we expect some good orders coming in from the marine sector or the defense sector. And the next 2 years also look to be extremely promising.
Correct. Thank you, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Devesh Mehta from Dinero Wealth. Please go ahead.
Sir, congratulations on the great set of numbers. I have 2-3 questions. I just wanted to understand on the replacement demand. So in the first quarter, how did the replacement demand panned out and how much it was in terms of overall sales?
The replacement market for material handling business as well as for gears varies from year to year. The demand the demand this year, this quarter has been healthy, but going forward, it will adjust itself to the annual consistent level.
So, sir, how much it was for this quarter? The percentage of sales?
Yeah, 1 minute.
So, in all put together, this quarter it works out to be nearly 33% for MHE and gear both put together.
Okay, both together. And, sir, actually I missed on the part of the open order book on the both gearboxes and MHE division side. Can you give that figure also?
Sorry, can you repeat it, please?
Can you help me to understand the open order book for gearboxes and the MHE division? I have missed on that part.
Yes, I will give you those figures. The total is 793.
Okay.
Okay, which consists of 655 from gear and 138 from MHE.
And sir,
These are the open orders as of 30th June 2023.
Okay. And sir, the recent 4 new orders which you have bagged, that will be for the engineered products, right? And neither for the catalog products.
It is a combination of all.
That's right, a combination. Okay, sir. Thank you. That's it from me.
Thank you. The next question is, so before we take the next question, we would like to remind participants, you may press star and 1 to ask questions. The next question is from the line of Anish Jabalia from Girik Capital. Please go ahead.
Audible and congratulations for
Your voice is not clear.
Am I more audible now? Hello.
No, you are audible, but your voice is not clear. It is cracking in between.
Yeah, is it better now?
Yeah, it is. Yeah, it is.
Yeah, so sorry for that. So congratulations for a good set of performance and also making inroads into the OEM market. So just wanted to understand one thing. Domestic business, we have, we aim to do between the gears and material handling close to 1,500 odd crores out of this 2,000 odd crores. Right. So I just want to understand, like I had checked with you earlier also in the earlier quarters about how your thought process is shaping up in terms of further growth in FY25. So if you can just help to understand, the quality of the growth which is driving, our, the quality of the demand which is driving our growth, and how sustainable are we seeing, this 25% growth to continue beyond 24 also?
See, if you look at our performance, we have been growing, and let me assure you, we will continue to grow because there are a lot of segments that we are now emphasizing on. Okay, one of them is exports. The other one is the marine business coming out of the defense sector. Plus, there are new products that we are developing. There is also the new Eon series that we have developed. So all in all, we see a rosy picture going forward. Okay. We would be able to sustain this kind of growth, and who knows, if the markets are favorable, we may be able to even exceed them. So we are very gung-ho about the situation. And as I had said earlier, we are emphasizing a lot on exports. We are setting up new infrastructure, enhancing infrastructure in various countries so that we are able to focus in a much better fashion on exports and give them the necessary support that they require from head office.
Okay. And secondly, in terms of the international revenue, so I think out of this 2,000, we would be doing close to 500 crores from the exports. So what I am seeing is that, the international audience is getting signed up, so they will be starting to contribute from 25. So from 300 odd crores in the last year, this incremental growth of 200 crores, so how is this going to come without support of the OEM business? And from FY25 onwards, how much has the potential from the OEMs that you are signing up and will potentially further sign up to add to this 100 crore base?
See, as of now, as we speak, we have enough inquiries on hand, and on interacting with various branches and segments of the industry, marketing industry, they are extremely confident that we will be able to achieve our targets this year. Apart from this, as you rightly said, that the OEMs with whom we have signed contracts, plus other OEMs where we have given offers, plus projects, plus new requirements, we are confident that we will be able to sustain this growth over a period of time.
Okay, sir. All the very best for the future. Thank you.
Thank you.
Thank you. The next question is from the line of Sanjay Kumar from iThought Financial Consulting. Please go ahead.
Hello, sir. Congrats on winning 5 new OEMs. Q2 FY23, I had asked you about it, and you delivered in 9 months itself. So great work. Can you help with the total outstanding OEMs that we used to work with, and how has it changed in the recent past, the number of OEMs that we work with?
It depends from region to region. There are various areas where we are working with OEMs. It starts from the Far East in the Singapore zone that we have to areas like Africa, especially South Africa. And then we have OEMs in Europe as well as OEMs in South America and in the United States. So it is very difficult to say. These are the ones that we have recently signed off with. They are all in Europe. These are new OEMs that we have encountered. Okay. They have high potential, and going forward, we are reasonably confident that we will be able to get good amount of business from them. It is difficult to ascertain as of now as to how much business would come our way, but they are promising a lot to us. We are assessing the situation on our own, considering the recession in Europe as well as the Ukraine-Russia war, as to whether the figures that they are committing to us are reasonably correct or not. Okay. But they seem to be, even filtering all this out, they seem to be very promising.
Okay. But these 5 OEMs, who are they buying from earlier, sir? That will give us an idea of the potential.
It is difficult to ascertain because some of them were buying from China, and some of them have new requirements which have come our way, etc., etc. So it is difficult to ascertain.
Right, makes sense. And will be supplying from India, or will it be through Benzler Radicon?
Both. We would originally, it would be manufactured in India. It may be supplied through Benzler Radicon Group, or it might be directly. It depends on which client are we talking about.
And second, you had mentioned in your press release about opportunities in Africa. What are you seeing? What is driving this? And if you could help us with the market size of Africa, or at least the markets that you are targeting there in Africa.
If we talk about the South African market, South Africa is a hub for the entire Africa because it's one of the most advanced countries in Africa. And they are very strong on minerals and minerals mining, as well as the technology of mining in minerals. They set up turnkey plants normally to mine various products, which could be gold, it could be copper, it could be various other minerals. When they set up the complete plant, these plants require good quantity of gearboxes, which normally are either bought from Europe or from United States. This is where we have penetrated, and we intend to penetrate more and more over a period of time. Apart from that, there are mines in Africa, where quite often the purchases happen in South Africa, and that is also where there is a huge potential of replacement business as well as new requirements for these mines. So this is what we are targeting. Apart from that, there are a good number of industries in South Africa, and these also require gearboxes, which we intend to cater.
What will be the market size of these things that you mentioned?
Market size, to tell you honestly, I will email this information to you.
Sure. That will be helpful. Yeah. And finally, on traction motor gearboxes, you had said that we previously supplied few components to Indian Railways, and specifically on metro, I've seen Voith or IGW's gearboxes in the metro coaches. So are we in touch with them?
Hi, Sanjay. I'm sorry to interrupt you there. To ask further question, I would request you to please join back the queue. Thank you.
But the answer is yes.
You're in touch with Voith?
We would be in touch with gearbox suppliers, the likes of Voith and Voith themselves.
Okay, and will it be a JV or will it be a tech transfer, sir?
We will be a supplier to Voith and to the others like them. So there won't be a change.
Perfect. Thank you, sir. All the best.
Thank you.
Thank you. The next question is from the line of Ankit Babu from the Shipcom Ventures. Please go ahead.
Good evening, sir, and congratulations for a very good set of numbers. Sir, I just have two questions. First is, sir, the scalability of these 5 OEMs, what it could be in the next 2-3 years from the current level of what you mentioned, around 5 million euros.
As I told you earlier also, and I will again repeat, that it is very difficult to ascertain that. Because quite often the OEMs, they give you a requirement which quite often varies in quantity because depending on their market situation and the competition that they experience. But as I have ascertained that our intention first is to give them a prototype, get it approved, and then look for quantities. And I am hopeful that as of now, the information that they have given to us seems to be quite promising. However, on our own, we are trying to ascertain how much of quantities we are likely to get and what it would mean in rupees and paisas.
Sir, because in the previous conference calls, you did mention that the size of each OEM could be 40-50 crores in terms of revenue potential. So from that angle, I was trying to understand that does these OEMs also have that kind of scalability over a period of time or not? Based on your assumptions only.
As I told you, the potential is high. Let me put it this way. Okay. But as I told you, they always say that once you get the purchase order in hand, that is what confirms everything. So, but the potential is high.
Okay, I understand. And sir, my second question, again, it's a repetitive question, so sorry for that. But you said that the industry tailwinds currently are very strong, both in domestic market and overseas markets. And you are in the process of getting a lot of approvals from the overseas markets, from various OEMs. That also visibility you have. And so just to reconfirm, you mentioned that you are going to sustain the current growth rates at least for the next couple of more years. I mean, this year you'll be growing at 30%, is what you are guiding. So this 30% growth is possible for next 2 years? I mean, FY25 and 26 also, considering the current visibility what you have?
I wouldn't say that tailwinds are affecting us. As a matter of fact, I would say that the tailwinds are an opportunity for us. Okay, because like these new OEMs that we have got, this is the time when the customer is, our customer is looking for new suppliers. So this is opening up doors for us because he feels that he wants someone who's more competitive, he wants someone who is giving better services, etc., etc. So he's looking for someone else to fulfill his needs, and that is where we step in, and that is how we get this opportunity, and this normally happens during the tailwind situation. So I look upon it as an opportunity, and that is where we have been able to score over the existing suppliers that exist as of now. And as far as we are concerned, we are reasonably confident that we will continue to grow the percentage of growth is difficult to ascertain year on year. We have a visibility for this year, but we will be able to reconfirm it by the end of the second quarter. However, going forward, we have great expectations for which we are enhancing our infrastructure to see to it that we are able to cater to the customers' needs.
Thank you. Ladies and gentlemen, in order to ensure the management is able to address questions for all the participants in the conference, we request you to limit your questions to 2 per participant only. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Hello.
Yes.
Thank you very much, sir, for the opportunity and many congratulations for good set of numbers. Sir, I wanted to understand a couple of things. This quarter itself, what was the arbitration award that we received?
No, arbitration award we received in earlier period. We have realized the money now. Arbitration award was already there with us.
So is there any amount that has come into P&L in this quarter?
No, there is nothing in P&L. All is in the balance sheet and the cash flow directly.
So one-off in this quarter is only 4 crores, right? The GST write back. So
that is only write back of GST, which in earlier quarter we have made a provision for that. But considering the some kind of work on account of cross-charge mechanism, we have utilized. We get an opportunity to utilize that.
So even if we adjust that, our EBITDA margin this quarter is close to 23 to 23.5%. But for the entire year, we are kind of looking at 22%. So is there anything, any pressure on your margins or going forward in coming quarters that you foresee because of which we are kind of guiding a little taper down margins?
At the beginning of the year, we have already informed we are going to have some cost on account of brand building in the overseas market. So that has not turned out in this quarter. That may turn out in the next quarter both. So that is the reason we are getting average margin of 22%.
That's quite helpful. And my second question is on your the second question is on your MHE division. I mean, the EBIT margins that we are seeing is quite good, right, at 23%. So is that a sustainable kind of margin that we see going forward?
Yes. Sustainable margin we should consider 18 to 20%. Due to the product mix, we are on the supply of equipment and the after sales service, the margin may undergo a change.
Understood. And so whenever we bid for any order, so what is the minimum margins that we kind of keep it for ourselves, both in the MHE and the gearbox division?
It varies from project to project and from order to order, so it's very difficult to ascertain.
Understood. Yep, that's quite helpful, sir.
We have tried to maximize our margins, and let me tell you one thing, that we will continue to try to maximize our margins on a consistent basis. I am reasonably confident that we will be able to sustain the kind of EBITDA margins that we have right now, and going forward, the general impression that I have is we may be able to improve it also.
That's great, sir, and quite helpful, sir. All the very best to you, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Shubham Agarwal from Equities. Please go ahead.
Yeah, thank you for the opportunity. So my first question is related to the cash that we have. As earlier mentioned, we have close to 250 crores now. So I wanted to understand, given that there is no major capex coming in, what will be our capital allocation strategy going forward? Hello?
Right now, the cash that we generate, we try to invest it so that we get the best possible returns at the lowest possible risk. And going forward, we are creating this kitty which would be helpful to us in case there is any need for the organization to either diversify, acquire, or utilize it for the benefit of the organization in the near future.
So are there any specific areas that we are looking at in order to diversify or increase our capability by acquiring some assets? Are we in the process already?
No, we are not in the process. However, this is a kitty which would be useful in case that opportunity arises.
Okay. And sir, my second question is related to the exports. So obviously, given our strategy of increasing export in terms of total revenue, this will be an area which will grow for us. And we have put a lot of effort in the last 2 years in this particular segment. So I wanted to understand, A, how satisfied are you with the current progress that we have? And B, what is the challenges that you are facing to achieve the milestone that you have set for the company?
If you are asking about the level of satisfaction, I would say the first year has gone in trying to organize ourselves, but now I feel that it is now taking a sizable traction. And going forward, the way that our marketing people are, I'm seeing the confidence in them. I believe that we would be very, very much bang on target this year as well as in the future.
Okay, perfect. Thank you for answering my question.
Thank you. The next question is from the line of Gunjan Kabra from Bivishai. Please go ahead.
Sir, thank you for the opportunity and superb set of numbers, so congratulations. Sir, I wanted to understand how much is the total order book in defense right now, and what kind of operating margins do we have specifically in defense since they are large cases?
The margins would vary from project to project, so it would be difficult to tell you as to what would be the margins.
Sir, on a blended or average basis, if you can say, in defense.
I would put it this way that it will depend on the kind of competition we have, the kind of product it is, etc., etc. But all I can tell you is that as of now, all the recent project that we did was profitable, and we are striving hard to see to it that the profits are reasonably good in this business.
Okay. And sir, how much is the order book from defense right now?
The order from defense right now,
we don't have any such kind of project order as on today. It is small other gearbox requirement or otherwise, those kind of orders are there. So it's not material. Generally, we consider such kind of order on and maybe a small amount on account of the spare kind of business, which is to the tune of 100 crore plus.
Okay. Also, sir, the order intake in this seasonally weak quarter has been around 442 crores, which was, very high than the very good quarter last quarter, which was around 370 crores. So has the business momentum, is it because of more of exports or good order booking in India right now? And
I would say right now the product mix from export, domestic, and the marine business all put together in this quarter has been reasonably okay. And the demand is coming from all sectors, and we are expecting good orders from all these three segments.
Okay. And sir, see, you are guiding of good prospects as well. So 2,000 crores revenue if we achieve this year, then I think we'll be operating at a full capacity utilization. So the further growth, if we are not doing any capex, then further growth, how will that come? I mean, are we not looking towards capex, or because just wanted to understand where will the growth that we think it will come from if we don't do capex?
The capacity utilization as of now is approximately 76%. Okay, so there is a potential to further scale it up, and this is where today there is hardly any subcontracting. Okay, if we add subcontracting possibilities together with the additional gap in capacity that we have, I still feel that we can do nominal capex, which is required for modernization and upkeep. Apart from that, I don't think we will need any more capex for at least the next 2-3 years.
Okay. And sir, just last question. So standard products is around 47% this quarter, and customized was around 53%. So are we targeting more of customized from next and more of standardized, or is it on order basis whatever you receive?
It is on order basis whatever we receive. We never say no to our clients. Every order is most welcome.
Okay, so we don't have any target of having more of customized or more of standard?
I don't think it is in our hands. It depends on what the customer requires. And we have ongoing customers. 70% of our customers are repetitive, and we can't go and tell them that you buy only this. So we accept the order with a smiling face, whatever they give us.
Oh, great. Thank you so much and good luck.
Thank you.
Thank you. The next question is from the line of Punjan Shah from Congruence Advisors. Please go ahead.
Hi, sir. My question would be on the patented products. So, in the previous presentation, we have shown that we are waiting for 3 patents for the approval. So, can you just give the sense about that and what the market size would be on that specific segment, and which product are we going to get that patent for the specific?
The new Eon series that we have developed is what we are trying to patent, as well as there are other few products. The potential is reasonably high because this is in the catalog product range, and but it is difficult to put a value to it right now because it will depend on how well it is accepted in the market. Though right now there is a substantial amount of traction on these new series that we have developed, but it is difficult to put any figures on it.
Oh, got it. Thank you. That was my question.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I now hand the conference over to the management for the closing comment.
Thank you. I take this opportunity to thank everyone for joining the call. We will keep updating the investor community on regular basis for incremental updates of our company. I hope we have been able to address all your queries. For any further information, kindly get in touch with us or Strategic Growth Advisors, our investor relation advisors. Thank you once again.
Thank you. On behalf of Elecon Engineering Company Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.